Hello everybody, welcome to the Technical Analysis webinar here with AvaTrade. My name is Troy, I'll be presenting. As we get started, let's do a quick systems check. If you would, type OK in the chat box if you're hearing me clearly and seeing my screen all right. All right, great. I've got enough responses. Looks like we're up and running fine. If anyone has any issues as we go along, please feel free to let me know in the chat box. As always, keep in mind, no one trade is guaranteed to bring you profits. With each and every trade you take, there's a risk of loss. On the other hand, with each and every trade you take, there's potential profits as well, which is what we're all after. Keep in mind that as we go over the different strategies and ideas, that what we cover is not meant to be financial advisement, but is coming from an educational perspective. Before we get on the live charts with the technical analysis, I want to real quick cover some basics about it, because I know we've got a mix of different experienced traders in the webinars, and for anyone who's brand new, we'll take a quick minute to talk about some basics of technical analysis, and then we'll go ahead and get on the live charts and work out some strategies. We're focused on some instruments today that are largely affected by the Ukraine-Russian war situation. And so we'll take a look at that in a moment. What is technical analysis? Basically, it's looking back at the price charts, usually candlestick charts. The candlesticks represent the different price movements, and looking for patterns and movements and price levels that lend some hopeful predictability to future movements. And so as we find patterns and price levels that look important or repetitive or predictable, we start to apply different technical analysis strategies to determine our entry points and exit points for future trades. And so the hope is, with no guarantee obviously, that some of the technical analysis of the past movements will help us better predict future movements. And we can use indicators as well that also are looking back at the candlesticks, trying to help us make those predictions as well. If you have any questions, you want to give any input, do so in the chat box as we go along. I'm happy to address comments and questions or input to share with others as we go along. Now, real quick, I pulled up just one headline that kind of rings the point home that we're making in the webinar as we look at the technical analysis, to keep in mind some fundamental news as well. Here's a headline that just came out on Reuters. Thousands of goods in rail cars are stuck at Ukraine's border, trying to get out of Ukraine and can't because of the war. And so what's on those rail cars? Largely grain products, which you can trade on wheat on our platform, and other products as well. They go on to list in the article, but the first thing they mention are 1,100 train wagons carrying grain are stuck and unable to be exported. So we keep in mind that Ukraine is a large exporter of grain products, wheat included, which is tradable on our platform. And so the prices are being affected by this situation, supply and demand. Obviously, people still need to eat. And if there's less supply, you understand what could happen to price. So we take a look at other products too that have been affected. Natural gas, crude oil, because of the fears of sanctions on those products coming out of Russia, or the fear that Russia could close the pipeline, cut the supply coming out of Russia for the European Union. The Nord Stream 1 pipeline that's been operating for some time, and the Nord Stream 2 already has been sanctioned, so that's not even functioning yet. So there are some fears that have caused knee-jerk price increases on crude oil and natural gas as well. And so we'll look at the technical analysis on those products and also on maybe the Russian ruble paired against the USD and see what is the technical analysis looking like, and are there maybe some opportunistic entry points. Okay, now as you trade on your MT4 and MT5 accounts with us, it might make sense to use our AvaTrade Go mobile app and our web trader platform to do that, because there are special tools on our platform that allow you to do your risk management and your technical analysis, your fundamental analysis a bit easier, rather than trading directly from the MT4 and MT5 platforms. And I'll show you that in our session now. And so as you trade on our web trader, which is located by logging in here, or on our mobile app, which you can download from the major app stores, you're trading on a user interface that if you log into your MetaTrader platforms, you'll see the trades are there. It's the same accounts, and by trading on the web trader and the mobile app that we offer, you're still trading on those MetaTrader accounts. Now, if I expand the view of my phone, we can take a look at our mobile app. So some cool features I want to make sure you're aware of that can help you with your technical analysis. If you tap on this lower right corner, this tab, there are some features from Trading Central. Market Buzz is for technical analysis of stocks. Very cool feature. We'll look at it maybe in the next session on fundamental analysis. Forex featured ideas and analyst views are bringing you trading signals, the technical analysis done for you, price levels drawn out, potential take profit and stop loss marks drawn for you. Everything's there. So as the signals come in, these are on cryptocurrencies and standard currency pairs, and also currency index, the dollar index. So if you say, okay, I understand US dollar has been strong because there's expected interest rate increases coming in the US, and the feds in the US have been very bullish about saying they're going to be aggressive about raising interest rates in the US. So no wonder the US dollar is strengthening. So you might say, okay, maybe I pair the US dollar against something, and look, the signals go in line with the fundamental news. And when you see, okay, fundamentally, there's reason for the US dollar to strengthen, and then you see the signals telling you it should strengthen, then maybe that's a signal you want to explore. So you can tap on the signal and take a look. The support level is drawn for you with the blue line. The take profit levels that are suggested are the green lines, and they're saying the preferred direction then is to buy. As long as the movement is still above the support level of 0.9310, it says long positions are preferred, long meaning buying. So they're saying as long as the movement hasn't broken below this support level, then it's still a buy position unless it's already reached the take profit marks. So this is how you read these signals. And then it gives you a backup move. If it breaks the support level, then they say sell. So you could have a pending order down here waiting to sell. If it breaks the support level, the alternate scenario says if it goes below the support level, 0.9310, then they're saying look for further downside, and you could sell with take profits at these suggested targets. Okay, so they give you a market move and a backup pending order in case the market changes, which we all know can happen. That first move's not guaranteed to win, and you can back it up with a pending order below the support level if you choose. Okay, so that's how you read these signals. And I think what we'll do is let's leave the app for now, and we'll look at more of these features, features that are also in the order window for managing your risk as we set up some actual strategy trades based on today's movements. And obviously you can trade from your app, but I also want to show you the full screen view of the web trader. So let me get out of the screen sharing view, which I did. I'm going to shut off my phone. And let's then log into the web trader, which you can do from right up here, right? And when you click log in, then you see this view after you log in, okay? And you can go to a multi-screen view by clicking this. This is a new feature, by the way. I think this is the first time I've demonstrated it in a webinar. They've added this feature because of requests from our traders to be able to show more than one chart at a time. So you can show any number of charts based on these templates. I've got the 4-chart view that I prepared with 4 different charts that I think we could maybe benefit from looking at today. So the dollar ruble, let's expand that and do the technical analysis. So as I'm on the dollar ruble and I expand the chart to a one-screen view, and so if we want to look at the dollar ruble, we see on, you can go full screen or non-full screen, by the way. And that's what I was saying. I wanted to expand to full screen. And so as we're looking at this dollar ruble, I'm on 1-day candles. And you see And I want you to type in the chat box, why did the dollar ruble go up so much? Meaning, why did the ruble weaken so much at this time frame? What happened here that caused the ruble to go so weak against the US dollar in this rise up that we're seeing? Does anyone know what that is? And I'm going to go to the single chart view for this for now, and then we'll go back to the multi-chart. Why did this go rushing up? Why did the US dollar go up so drastically in this time frame during these days against the ruble? Ruben, I'm not sure what you're asking about the extended take profit versus the lower take profit. You'll have to expand. Yeah, Peter, it's the war. I think it's probably obvious to everybody. When Russia invaded Ukraine, the ruble and the sanctions kicked in, started to be applied. The ruble bombed. It went down to huge lows. And so the US dollar went rushing up against the ruble, not necessarily because the US dollar strengthened so rapidly. Pretty much anything that was paired against the ruble looks like this, went up. But the US dollar was strengthening with the fear of the war that was starting. And so the US dollar paired against the ruble was a nice pairing to have a strong horse against a weak horse. But look at the opportunity. Look at the ruble gain back its strength here in the second half of the time frame since the war started, and now back to where it was before the war started, pretty much 99% or so. So if you believe that this war could continue, and I think the latest estimates out of the US from the Pentagon are they're talking not months but years that this thing could drag on, and the sanctions could drag on for years. If the sanctions and the war were the reason the ruble weakened, and now the ruble's come all the way back to where it was, then fundamentally there could be a reason why you think the ruble could weaken back again. Okay, and you can see a lot of times it makes sense, and I'm trying to show you ways to align the fundamental news with a optimal technical analysis entry point. Okay, so if you were saying, okay, there's reason to buy on the ruble now because of the war, the ruble could be weak. There are more sanctions coming, countries are saying, also on the Russian economy, which could further hurt the ruble. Look at the opportunity then if you think this could go back up towards these highs with the US dollar gaining ground back up again. So you could prepare a move on the US dollar Russian ruble if you so choose. So let me show you how you could set that up. I went back to the multi-screen view. Let's minimize, and let's take a look at then the order window for US dollar Russian ruble. Okay, so now we've got the order window here, and maybe I do go back to the single view. And if we look then at what entry point, what might we want? It might be a market move, right? Instead of doing a execute when price hits, we can do a market move. And so take profit. Maybe you say, okay, I won't be greedy. I want my take profit halfway to this high. So if the high was up here above 120, then what we can do is you could kind of play around with, do you want to go for that high, or do you want to just say, okay, I'll go at one of these little steps on the way down to not be too greedy, right? That's up to you where you'd want to have your take profit. Maybe 100 makes sense to you, a flat 100, a nice round number, right? So take profit, we could put 100, okay? And stop loss, you could say just below these lows down here could be a nice support level, okay? So I could say take profit just below these low points here. So, or I'm sorry, stop loss. So stop loss, let's say at 72, just below all of this support here. So take profit at 100, stop loss at 72. And we see 2.5 to 1 approximately, actually better ratio than that, potential profit to risk. Okay, and you can even have a better ratio than that if you want to go after this next step up. You see it's like a staircase on the way down. It went like this, flattened out, went down, flattened out, went down, flattened out, went down. So it's a staircase. Now, if you think it'll go back up, you could take profit at any one of these potential steps back up. There's one step, that could be a take profit mark. Here's the next step, that's where we put ours. In this example, there's the next step, you can put your take profit here. Here's the next step, that's the high point. So you can be as patient or as not patient as you want with where you put your take profit. I'm just picking right in the middle of these steps, okay, as an example. And we've got better than 2.5 to 1 ratio of potential profit to risk, okay? Now I can start to look at my trade size and say, okay, how much am I willing to risk on this move? And if I say, okay, I'm willing to risk 500, maybe I have a balance of 50,000, let's say. I know my demo account here, my dummy account that I'm using, has a balance of almost 100,000. Let's say I have 50,000 and I'm willing to risk 500. So, which would be 1% of that fictitious balance that I'm making up. So then I can put the trade size that makes sense. 0.5 lot size. I'm sorry, 0.05 lot size is risking 348. So I say, okay, I can go a little bigger than that. 0.7 risks 487. 0.08 risks 556. So I would either go 0.07, a little less than 500 risk to my stop loss, or 0.08, a little more. So, but you can see how the order window helps you with your risk management. So you get it set the way that you want it. Potential profit to your take profit, possible loss to your stop loss. Your only other cost then would be overnight interest, depending how long you hold the position, which usually is pretty minor compared to the overall P&L. And then you take a look and you say, if this is where I feel safe with my stop loss, my take profit, and you like the possible profit, possible loss, then you can enact the trade. And you might even decide, well, I'd rather have my stop loss below this level down here. And so you could adjust it to make your stop loss maybe feel a little more secure. And that's up to you how you want to set that up. When you're ready, you can set your trade in motion. I just need to get my stop loss a little further away. You see it's telling you need your stop loss. Stop loss and take profit have to be a certain minimum distance away, so no problem. Let me adjust it, and we'll put the take profit the next step up, and the stop loss, let's put the next step down, below that support level down here. Okay, so let's go 67 on the stop loss. And this is a good lesson for everyone. Different instruments require a certain number of points away for stop loss and for take profit. And let's go 107 here. And now we see an even better ratio, potential profit to loss. Now we just need to adjust the trade size to where it makes sense. Okay, there's my trade size. That gives me my potential profit and possible loss around 500, the number I was making up. And you decide what amount do you want to risk per trade. And so once I have that set up, stop loss below the current price, take profit above the current price, in buy position, and there we are. I know what's happening here. It wasn't the distance away. It wasn't the distance away on my stop loss and take profit. We were far enough away. I should have read the error closer. You see it says close only allowed for this symbol. What that means is the market is too volatile right now to allow more positions to be opened on it. The company, because of the feed provider, has temporarily marked this as close only. So if you have trades open on it, you can close them, but you can't open new trades right now. So I would say keep an eye on this instrument. I thought I had the distances good, and I did. So you can use this step, and you can use your stop loss at these levels here, wherever you see fit. But just check back on it later today or tomorrow and see if it's open for trading again. Okay? Maybe it's too good of an entry point for the market, right? The market, the end liquidity providers know maybe 100% of people are buying on it right now, and they can't balance out the orders. And so temporarily, It's you can only close positions on it. You can't buy. This isn't, by the way, this isn't something that AvaTrade directly controls. When the market opens on this instrument again, we'll provide it. So check back. I think this could be a huge opportunity. And actually, it looks like it could drop a little further and could give you a better entry point if you were looking to go long. Okay. Now let's take a look at, yeah, Peter, you were saying it's not an option with the ruble, and now I understand why you were typing that. Thank you for that, by the way. But we see the opportunity here, right? So check back on it, everybody. Now let's take a look at these others that look almost just as good, by the way, in terms of opportunities. So let's expand the view on crude oil now. And let's bring up the crude oil order window as well. Okay, and we'll switch to crude oil only on the view. Whatever you click on last will be in the single view. There should be. Let's go back. Multi-view. Crude oil. Let's see if we can get that to show in the full view now. Okay, well, it's okay. We can see it from here regardless. Let's expand it. And the crude oil, we can see on the, as I said, this is the first time I used our multi-screen view. Sorry for the little bit of a stumble there. For some reason, it's not allowing me to expand anything other than the dollar ruble to full screen view. Maybe a glitch we need to fix. Okay, so crude oil. What we can look at still, even from the multi-screen view, is that on the 1 day candles that I'm showing, there's a support level that has been reached. Let me get rid of some of these lines. There's a support level that's been reached here. Okay, 1 day candles. This is when the war started. Up went crude oil, back down, established support here, back up, back down, respected the support here, and now is sitting on that support after bouncing and coming back down to it. So we see what used to be resistance, resistance, resistance became support, support. Okay, so if you think that more sanctions are coming, maybe on the energy sector out of Russia, if you feel that that's likely to happen, there could be a big reason for crude oil to go flying back up again. Okay, and if you feel that way, then the technical entry point is advantageous right now, meaning it's right on the support level. To get your stop loss below the support, you don't have to risk very much compared to the potential profit if crude oil starts testing some of these high points that it reached in the past weeks. Okay, and so you could be looking at a take profit that you could go after at a couple spots here, depending how patient you'd want to be. This is a spot that's obvious that if it came rushing up, it might hesitate to break. And if you're more patient, you could go after this spot up here. Okay, so we could simulate a potential buy position on crude oil, take profit up near, let's say this first spot, up near 115 as an example, and then stop loss to get below this support level, you only need to be at about $92, $93. So let's go 93 as an example. Okay, so now we've got our stop loss down here below the 1 day candle support, and we've got our take profit up near 115. Now you could play around with that, right? You could say, no, I want my stop loss below this level, this support level as well. Okay, then you're down at 85. But either way, the potential profit is still larger than the distance to your stop loss. But you can play around with where exactly would you want your stop loss. Maybe it's more of a scalp, and you're saying, I only want my stop loss here so I can take maybe a bigger trade and still have the small risk. Obviously, the closer your stop loss, the more likely it could be hit if it goes the wrong way, but the larger the potential profit is with smaller risk with the stop loss closer. So you can play with that concept with a couple different trades if you want. So then if we're saying take profit at 115, if you notice each time you click on the chart, it kind of resets the settings. So I just quickly reset them. And 92, 93 for my stop loss. Let's go 92. All right, so potential profit, about 3 times what I'm risking, approximately. So it's a nice setup, even with taking profit only halfway up to this all-time high at the first step instead of the second step. And so now I can say, okay, if I'm willing to risk 500, now I adjust my trade size. 0.8 risks 442, 0.9 risks about 500, 498 or so. It's changing because the market's moving as I'm talking. So if I like that setup, then I'm good to go. All right. That's based on technical analysis, support level on the one-day candles, and the fundamental view, understanding why this could go back up with some of the sanctions that could be coming, additional sanctions on Russia. Any questions, any comments at this point? And by the way, we continue to add new features to the web trader. So you see the multi-chart feature now has been added. I think it's 95% good. In playing around with it just in this session, I can see a couple tweaks that maybe the programmers could do, but really cool features being added and nice upgrades as we go along. Any questions, comments on the crude oil idea that we looked at here? And yes, keep an eye on that USD ruble. It should come active sometime soon. I don't think it'll be blocked forever. Yeah, it does look bearish. You're right. That's why it's dropped, Pablo, to a support level on the one-day candle. So if you feel like it'll break that support and keep dropping, then maybe you wait for confirmation of that. You could put a pending order below that support level. Okay, so if you want to put a pending order down, maybe you see this line. If it breaks the one-day candle support, maybe you've got a pending order to sell from down here with a take profit at a lower support level. Definitely, you're right, Pablo. We're looking at a technical entry point for buying, but that's with the understanding that certainly it's been bearish lately. And you have to ask yourself, why has it been bearish? And part of that is U.S. Reserves release has been promised of 1 million a month for the next so many months coming up, and some other factors that maybe eased some tensions around crude oil. But at the same time, we can understand fundamentally how that could reverse as well. Yeah, sure. If you want to insert indicators onto the chart, it's been requested. Whatever chart you've clicked on, all you have to do is click on Studies. And here's the indicator list. So let's say I want to add an RSI. So RSI. Relative Strength Index. Okay. Relative Strength Index, I click on it. And now it adds it over here. Relative Strength Index. I can add more than one. Whatever moves to this box, and I can set the settings. Then when I click Save, you see it loads on the chart. So now I have the RSI down here on this chart. And by the way, I can go up here and say, I'm looking for a feature. It's not live yet necessarily. Let me see, Studies. There it is. If you click on Studies, it puts it on all the charts. So now you see the RSI is on all of the charts. That's another new feature. So you can set up the charts and settings on one chart. And if you want to carry that to all the charts, you click this tab. And now if I want to remove it from those charts, I unclick that tab and it can adjust it off as well. Okay, I can go back and remove them. So for now, I've got the RSI on all of these charts. And so it's that simple to put on. Good question. And you could put any number of studies. And so I can go back if I want to remove this, remove, save, and now it came off. And if I want to remove it from all the charts, it just applied the settings from this chart to these charts. Okay? Very cool features, and thank you for asking that. There's a question about setting a time for a trade to occur rather than a price. You're not able to tell a trade to open at a certain time. You have to put a price, an entry price. The time feature on those pending orders is you can tell it that it's only good until a certain date and time, that you don't want it to open at that price if it goes beyond a certain time frame or certain date. So you can make it time sensitive, but it won't open based on the time. It still opens based on the price. You can restrict it based on the date and time. Good question. Okay, so what we can do is look at then some others like wheat. We saw that article that there are thousands of train cars, hundreds of train cars anyways, carrying grain supplies that are stuck in Ukraine. Ukraine being a major world supplier of wheat and other grains. So if we want to look at that, then we can take a look at wheat on time frames that might make sense. And you see wheat went flying up. This is when the war started. 1 day candles. Wheat went flying up and then is pulled back down just like some of the other instruments like the USD ruble, etc. And so as wheat came back down and found a basement, you might look to say, okay, if train cars are still blocked, wheat exports can't get out of Ukraine. Also, one thing to keep in mind, fertilizer out of Russia could be disrupted and sanctioned. And so fertilizer is needed to grow wheat and other grain products around the world. And Russia is the world's #1 supplier of fertilizer. So you could be thinking about long-term effects on how good will the crop production be on grains and wheat from places around the world like the US and other places that have traditionally relied on fertilizer from Russia. So that might be more of a long-term projection that wheat supplies and grain supplies could be negatively affected in the bigger picture on long-term moves as well. But looking at the short-term move, you could look on 1 day candles here and say, maybe this is a support level I trust to buy on wheat, since we know train cars are stuck holding wheat in Ukraine based on that article we just looked at the start of the webinar. And maybe you put your stop loss below this support level as an example. Now, obviously, if you think wheat should keep dropping, if you think the war will end and the train cars will roll out, I mean, if that happened, likely wheat prices then would drop further. So if you have that view, you can go the opposite direction. But the technical analysis strategy might be buy on wheat from here with a stop loss below the support level, and then a pending order down here that if wheat breaks the support, then you're assuming the news went the other way and the train cars maybe got out. So you could have a pending order down here to sell on wheat with a take profit down at the next support level down, which would be maybe down here where the price was before the war. Okay, so you could do two moves: a market move buying on wheat right now, and a pending order with your stop loss down here to sell on wheat. Okay, and so I can show you how to set that up if it makes sense to you. So what we can do is, let's bring up wheat in the order window. Okay, and we'll take a look at wheat here. Let's see if I can show only wheat. No, still wanting to only show what's in the first square. We'll go back to the multi-view, and let's do this. I'll make this one wheat. Now we'll be able to expand and see only wheat. There we are. So that's the rule, apparently. Whatever's in the upper left quadrant of the multi-chart view, that's the one that we can expand to full screen. All right, so we've got wheat then showing, and we've got two moves we're talking about. A market move, which I'll simulate now. And again, you don't have to agree with this. I'm just showing you a technical strategy that makes sense maybe with the fundamental news right now as well. And so my take profit could be up here maybe at 1250, near these highs that it reached. And again, I'm trying not to be too greedy. I'm not going to the all-time high up here. I'm going to, or the recent high, I should say. I'm going to something just below that resistance level to make it maybe more likely to hit. And then my stop loss, I just need below this support. So maybe down at 985 or 984, something in that range. So my potential profit, what, 4 or 5 times my risk? 5 times my risk approximately. And if I'm willing to risk 500 as my made up example, then 0.09 risks just under that, 472. All right. And I'm all set. So I've opened my market move on wheat based on the technical analysis, looking like a nice setup for a larger potential profit than what I have to risk. Now I can go back and say, all right, what about a pending order? What if those train cars get out? What if the war ends and there's a peace agreement? What if unexpectedly that happens? Then wheat could go flying down, break this support, and likely if the war ended, you could see wheat easily come back down to where it was before the war, down here. Okay, so a take profit just before that low point that it was at before the war could make sense if the news completely reversed on us. So we could say execute a sell position if the price hits, execute when price hits, somewhere just below the support level, let's say 984, the same spot we had the stop loss on the buy position, 984. If the price hits 984, and I can restrict it by date, okay, not by time, but by date. I can say it's only good for the next week. I can program it a time frame that it'll activate within. I'll just leave the date off. Take profit then could be down here around 850. Say 855 to be above the support level enough. Stop loss, if it does break the support and trigger our trade down here, then our stop loss could be back above that, maybe back above 1,000. So maybe 1,010 on our stop loss. Whoops, let's type it correctly. 1,010. Okay, so about 6 times, 5 to 6 times potential profit to risk on that one as well. So pending order is set up and good to go. Okay, so market move, trusting the support with the current fundamental news, with the train cars stuck that's carrying the wheat trying to get out of Ukraine. And if the news reverses and it breaks the support, then you have a pending order ready to sell with any opposite news that could cause that to happen. Okay, any questions on that strategy with wheat, let me know. I'm reading through a question about indices and futures. Okay, so our major indices are traded on the futures, meaning they don't open and close each day. If we were trading on the non-futures, then at the end of each trading day, let's say for US indices, when the US trading day ends each day, right, 4:30 p.m., 5 p.m. New York time, then you wouldn't be able to trade until the market opened the next morning, New York time. We don't do that with our major indices. They're traded on the futures. And so you're able to trade 24 hours a day except for the weekend when even the futures close for trading with us, okay? The only instruments that are tradable through the weekend are cryptocurrencies with us if those are available in your region. Some regions like the UK and Canada don't have cryptocurrencies available with us, but most people do. Very good question. So an example also, difference between futures and non-futures would be, let's say, gold. Gold is, if you trade on just gold, here, let me show you. Gold, you see gold that just says gold, that's traded on spot price and it doesn't expire. You can leave the trade running month after month. Gold with a date, you see April 22nd, gold August 21st, etc. The 2021 dates have passed. This one, April 22, you can trade on. And if your trades are running when that contract expires in April on that date, then the trades are automatically closed wherever they're at. They don't keep moving forward. So the same with crude oil. You see crude oil listed, crude oil without a date. That means it runs indefinite. If you trade on crude oil that's listed with a date, then those expire because those are futures contracts that expire. But if you're trading on indices like the US 100, US 2000, there's no date listed. So they're traded on futures, but they roll over. Because there's no date listed, they roll over. So they won't just expire, they'll roll over on the new futures contract. It can get a little confusing with all of that, but if you have questions, talk to your account managers about that on more specific instruments. Very good questions, though. Now, there's one more instrument I wanted to look at. We've got some time. If I expand this view again, go back to the multi-chart view. Natural gas was something that we could look at as well. And if I want to put natural gas in the top corner, so we can expand it to a full chart view. Okay. Why is natural gas so high? And why didn't it come down like, you know, the Russian ruble weakened like crazy when the war started and then it re-strengthened. Crude oil went flying up to a high point when the war started and then came back down. Natural gas went flying up and it's still up there. Why? I mentioned it earlier in the webinar. The Nord Stream 2 pipeline project was halted, which was going to carry more natural gas out of Russia to Europe. So that future supply of natural gas for now has been cut off to Europe and to much of the world. The Nord Stream 1 pipeline, still bringing natural gas out of Russia to Europe. The European nations are all talking about stopping using that as quickly as possible. They're ramping up wind, energy, nuclear energy as well. Maybe some of the countries like Germany and others that went away from it are talking about going back to it as quickly as possible because they want to get away from using natural gas. Well, those types of threats then cause the possibility that Russia could just say, okay, you want to play games with the Russian economy? Maybe we'll just shut the pipeline down. And what if that happened? What if Russia turned off the pipeline of natural gas to Europe? These fears are causing natural gas prices to stay high. Okay, and this is the weakness that, depending on one country so much, Europe I'm talking about, depending on one country so much for their natural gas supply, puts Europe in a kind of a weak position here to have to adhere to some things from a country that maybe they don't agree with what they're doing currently. And so we say, okay, we understand why natural gas went up. But if Europe is now saying they're going to try and ramp up solar, ramp up wind power, ramp up nuclear power, then couldn't natural gas push back down in the coming weeks in response to those promises? And I'm not saying it will. I'm just saying it could, based on those promises that are being made out of Europe. And so we look and we say, okay, this is a natural resistance level right now in the one-day candles. Resistance down, resistance down. And then we see here recently it hit that price, came down again. So from a technical analysis standpoint alone, without talking about fundamentals, you could say this is an established resistance level. I'm going to sell and put my stop loss above the resistance. That's one potential move you could do. And your potential profit could be a lot larger to these support levels down here than what you're risking if it breaks through the resistance and hits your stop loss up here. So that's a potential market move you could do now, to short natural gas, hoping that all of these promises about ramping up nuclear, ramping up wind, ramping up solar energy sources could maybe cause natural gas to push back down some. And then, hey, maybe there's some negotiations with the war that also could get rid of all this fear, and natural gas could come down as well. That's a possibility. So, but technically speaking, that's a resistance level. You could put your stop loss up here and try to short natural gas. Okay, so that's an easy market move to set up if that's what you wanted to do. So let me go to natural gas. We'll click on that, bring up the order window. Just wait for it to load. Looks like the data feed is a little bit slow on the natural gas. Let's see if the futures natural gas loads. Yeah, it's loading perfectly. For some reason, the natural gas feed is not quite there. Let me refresh the screen. Now we have a price. Sometimes you just have to hit refresh. There it is. Okay, so now we've got natural gas here. If we wanted to do take profit, stop loss based on the chart that we were looking at. Okay, voila. Now we have the chart and the order window. So based on what we were looking at here, if we were going to sell on this, and again, I'm not saying you have to think this way, but we saw the resistance level up here, okay? 1-day candle. So if you get up, say 6.35, 6.33, you're above that resistance level that we drew the line on. So stop loss, 6.33. Take profit, maybe this first support level I drew down here, which is around 4.5. Oops. 6.33 on stop loss and take profit 4.5 or 4.6. There we are. So potential profit 1,600, risk minimal compared to the potential profit. Now again, I adjust my trade size so that I risk the amount I'm willing to risk. And so you see it calculates right around 500. Maybe I go a little lower to get just below it. And now I know my potential profit to my take profit, potential loss to my stop loss. If I'm happy with that, then I set my trade in motion, or I could say, you know what, I could take profit at this level up here and still be in good shape. You play around with how you want the potential profit and risk based on the technical analysis, resistance level, shorting it, taking profit somewhere at a support level that makes sense to you. And there we are. Then you could set up a pending order as well. If you think the war could get worse, maybe Russia turns off the pipeline to the European nations and for natural gas. If you think that could happen, or even if you don't, but you know, hey, anything's possible, you could put a pending order up above this price to buy just in case the price explodes through that 1-day candle resistance. And then you just have to put your stop loss back below that broken resistance potentially to manage your risk. Okay, I'm not going to take the time to do the pending order, but you certainly could set that up just in case the news reverses. Any questions, comments before we end things today? Shalane, yes, you can have your MetaTrader 4 platform open or closed, logged on or logged off when you're trading on the web trader, it doesn't matter. But when you log in on your MetaTrader platform, if you do, you'll see the same trades that you set in motion on the web trader. They'll be right there, even though you didn't place them from there. Because in the end, it's the same account. Good question. All right, everybody, I think this is a good place to stop. We looked at some potential opportunistic entry points, and also fundamentally speaking, they could make sense, not just from a technical standpoint. Take a look back at that USD Russian ruble. Now that we all figured out why my trade wouldn't open, the error actually, had I read it more closely, the error was saying that it wasn't tradable. It's on close only right now, but the other three are tradable that we looked at. And you can look back for that USD Russian ruble. It actually looked like it was dropping to an even better price if you were looking to go long on that eventually. So check back later today, tomorrow, see if that's available if you're interested in trading on that. All right, everybody, thank you for joining. It's been a pleasure. And until next time, go after those profits. I'm wishing you good luck.